The PASS Saving and Spending Plan is a useful tool that can help with two things. First, it can help prepare PASS applications by calculating the amount someone can contribute to a PASS and by showing when someone has saved enough money to purchase needed items and services. The second way it is useful is with tracking and reporting PASS expenditures. Let me show you how that works by looking at an example for Jerry. For Jerry, PASS is particularly useful in that he needs a vehicle. And as you know, VR can't assist him with this. But PASS can purchase vehicles, and a PASS can also show that his business is, at least in part, supported by resources other than MRS, which is a requirement for self-employment. So what Jerry could use is a truck, and he's calculated that the truck will cost approximately $8,500, and it will require a $1,000 down payment, plus about 15 payments of $500, which includes some interest. He also needs tags and registration and inspection for the vehicle, which he figures will run around $250. His first year insurance will be $700 paid in two installments of $350 each, and a $1,200 trailer. And having these things will allow him to expand his territory and eventually get more customers. So his current benefits, he currently receives $720 in SSDI and a small SSI check. So he's a concurrent beneficiary, and we know that makes him a good candidate. So I'm going to flip now to the PASS Saving and Spending Plan. Let's see, get out of this. And this is what the worksheet looks like. It's you'll see it's an Excel spreadsheet. And so you want to make sure that you start up in the upper left corner in cell A1. So the first section is income, which calculates how much you can set aside in a PASS. And remember, SSI can never go into a PASS, so it leaves you with two options. Unearned income, which is usually SSDI, or earned income, either wages or net earnings from self-employment. So if somebody has unearned income to set aside, like Jerry does, it's entered here in cell B2. And remember, Jerry had $720 in SSDI each month. And when I put that in, it will automatically calculate the countable portion of that, or what can be contributed to a PASS. In his case, that's $700 a month. The $720 minus the $20, $700. So I can take that down into the cash in section, and you'll see under cash in, first you'll see the SSI back pay, which you can just ignore that for now. But right under that is the SSDI section. And because his countable SSDI is $700 a month, I'm going to enter it here, and then I'm going to drag it across the whole year because he can continue to put in $700 a month each month. So Jerry's planning to start his business in January. So he's starting his PASS the same month that the business starts. But had Jerry planned ahead, he could have started the PASS earlier and started saving for several months for business startup. So that's something that VR counselors can help the team understand, that people can save for future purchases. And by setting aside his SSDI, Jerry's now eligible for the full federal benefit rate in SSI. So the SSI makes up for the SSDI that he sets aside. So he's living on his SSI while his SSDI pays for his work expenses. But earned income does impact SSI. So once a business starts and he has earnings coming in, it will decrease his SSI check unless he also sets a part of his earnings aside. So Jerry wants to do that. He wants to set aside some of his earned income as well. And before I show you this part, you'll see it's right here. In this cell in C3, you'll see this 3250. Just ignore that. It's just a placeholder for the formula, and that that number has no meaning at all. But based on his financial projections that we did in Module 4, Jerry is estimating $1,271 in what's called net earnings from self-employment. And this figure is based on his average monthly net profit of $1,376 a month multiplied by 0.9235. So it's a little less than his net profit, but that's the figure that they actually use. And if I enter it here in cell B3, it will automatically calculate the countable portion of earned income in cell D3. So in his case, it's another $603 a month. And remember, if Jerry doesn't set that aside, his SSI is going to go down by $603 a month. So it's a use it or lose it kind of deal. So now I'll scroll down here under cash in again, and I'm going to add that $603 a month here. And then again, it's something he can set aside each month, so I'm going to drag it across. Oops, I'm just going to make those columns a little bigger so you can see it. And, oops, I didn't drag there. Fix that, 603. There we go. So you can see now that Jerry can set aside $700 a month in SSDI and $603 in earned income, giving him over $1,300 a month that he can work with his PASS. So before we get to expenses here, I want to show you, notice that there's a beginning balance up here on line 8 and also an ending balance down here on line 13. So before Jerry can start spending money from his PASS, he needs to have enough to cover each expense. And you'll see here that I added his expenses in the cells on the left in cell A18 through cell A21. And usually there's some logical order in what is purchased first. You know, for example, Jerry won't really need to pay for his tags and registration and inspection until he has the truck. And he also doesn't want to start paying for his insurance before he has the truck. But those three kind of have to happen simultaneously, at least the down payment and the registration stuff and some of his insurance. The trailer might be purchased last out of those items. And he needs at least $1,000 down payment for the truck. And you see from the beginning balance that he would have enough in January to purchase the truck, but he really wouldn't have enough to also cover the registration and the insurance. So I'm going to move it to February. And let's say he puts the $1,000 down in February. He also does his inspections and tags and things. And remember, the insurance was going to be in 2 installments. So he pays $350 in February for his first 6 months of insurance. And he doesn't have quite enough money to buy his trailer yet. So he's going to have to hold on that. He also is going to have to start making the $500 payments for the truck each month. So I'm going to add that in and scroll over. He's actually making, it said 15 payments, and he's got 10 here. So I'm going to need another 5 payments over here on year 2. I'm going to add those in. And I'll go back to year 1. So the only thing he left to pay for is the trailer. And you'll see that by March, he has enough money to cover the $1,200 trailer just fine. And so this is a very simple PASS. It's not, you know, a lot of different items or a lot of high-priced items, and that he can meet that savings goal pretty quickly. So you'll see here that his balance, his ending balance, keeps running up. He probably wouldn't need to keep putting money in this long. Let's say if he zeroed these out, zeroed out what he was contributing from, let's see, those last 4 months. If he only really set aside money from January through August, he still has plenty of money to pay all of his expenses. Now, and remember that PASS for self-employment can minimally be funded for 18 months. So in this simple example, Jerry doesn't really need that much money, so it would stop earlier. But this is an opportunity to explore what else he might need. For example, like would additional employment consultation be helpful in those early months to help him get started? Or might he need assistance with setting up a bookkeeping system that he can manage and some help with learning that? Or perhaps additional marketing. So think about what else might be included in a PASS. So in summary, we can use this tool both for planning and for tracking. We can use it in planning to identify the needed items and services and when those purchases will be made as required in Section 4 of the PASS application, the part that's called Your Plan. And we're using it here to project future purchases, similar to how we use the profit and loss projections to project future profit. But when we can also actually use it to record actual past deposits and expenses. So sometimes things just don't go as planned and the beneficiary needs to request an amendment to the PASS, and that's fine. But the PASS savings and spending plan can help record and track what really happened, which is really useful in reporting.